The target Fed rate has changed, and this means that savings accounts interest rates have begun to fluctuate. Now, you might say savings, you might say money account, doesn't really matter. Everything out there, no matter how you word it, Wealthfront, Betterment, doesn't matter. They all start to fluctuate. Now, what does this mean for you? Should you keep your money in one place or move it somewhere else? Well, what's going to happen going forward? And in this video, I'm going to tell you guys exactly what savings accounts or money accounts have actually started to change, which ones have not, and which ones are still competitive. Now, on top of that, I'm going to tell you exactly which savings accounts out there or money account is actually the best place to keep your money in currently, or if you should move your money from one place to another while you still can, because the interest rates are going to begin to fluctuate apparently every single month. Now, if you don't understand that, make sure you stick around to the end of the video, because I'm going to tell you exactly why they're going to fluctuate every single month. So stick around so you'll find out. Now, on top of that, guys, if you guys don't know me, my name is TommyBryson. I'm an accountant, and I post videos on YouTube every single day. Yes, I said daily content. Subscribe to the channel, hit the notification bell so you get notified every time I post a new video, which again is every single day. On top of that, hit the like button while you're at it. And I want to ask you guys a question. Have you noticed your interest rates have gone down? Have they gone up? What's going on with your account? Let me know in the comments down below. I want to find out how many accounts have actually changed and how many have not. Because if you ask me, my account has actually changed and actually lowered. So comment down below and let me know what's been happening with your money account or your savings accounts. Comment down below, let me know. Now, the first thing I want to actually break down is, Tommy, why are Fed rates so important when it comes to my savings accounts, and why should I even care? Okay, the answer is this. Number one, I have a full video breaking this down. Number two is this: Fed rates determine at which rate banks lend money to each other overnight to cover the Federal Reserve deposits that they are required to actually have in their banks. Now, the first thing is this, guys. This is important because at this rate, if it's higher or it's lower, it affects your savings accounts rates and your interest rate. So it's very important that you keep an eye on this. But before, you didn't really keep an eye on it because why? Because it didn't matter, because savings accounts rates weren't really going down or up either way. They were stable at 0.05%, 0.15%, 0.10%. Didn't really matter. The highest was literally like 1% back in the days, okay? But right now, it's very important because now these online banks are passing the savings on to us. Now, you might be asking me, well, Tommy, how often can I expect this to happen, and how can I prevent going crazy over this every single time it does take place? Because I can't predict it, right? The answer is no. You can't predict it. I'm going to tell you exactly how it works right now. Well, there's something called the Federal Reserve Open Market Committee. Now, these people in charge of the Federal Reserve, they meet every so often. They talk about inflation and also unemployment, and together they come to a conclusion whether they're going to raise Fed rates or lower them. When this happens, your interest rate on your savings accounts is probably going to change, because this time they're trying to pass on the savings to you. Now, here's the thing, and here's how it works. Tommy, how can I know when it's going to take place? Well, the answer is this. It is public information because it is the government, so everything has to be public. And the answer is this. They will be meeting every so often, every few months, to actually talk for around 2 days and then set the Fed rates. Now, if you don't believe me, notice this. Fed rates started changing when they actually meant around July 30th to 31. When this happened, well, what happened was all the interest rates for savings accounts started to fluctuate and go down, especially when it started to talk about hey, we're going to lower them, we're going to put them up, whatever, it started to change right then and there. Now, the answer is this. Well, I'm going to tell you exactly for the rest of the year when can you actually expect for this to actually take place. Well, we already know when they're going to meet, for how long they're going to meet, and how often they're going to meet. So for example, July 30th to 31, they met and they decided to lower Fed rates. Now all the interest rates out there are actually lowering down, right? We understand that. But you probably wonder, well, Tommy, when is it going to happen again, and when can I predict it? So then that way I'm ready and I'm not stressing about the entire thing. And the answer is this, guys. They're going to meet again on September 17th to 18th, also October 29th to 30th, and also December 10th to 11th. If you notice, it's a pattern. They meet every so often for literally 2 days, and then they decide if they're going to go up or down. Now, these meetings are very important because you want to make sure you're with a company or savings accounts or cash accounts or whatever you want to call them these days. You want to make sure the company you're actually doing this entire thing with actually is competitive, and they're always going to look for your best interest, and they're always going to raise it or lower it in the most fair way. Okay, so that's the first thing. Now, you might be asking me this, guys. Why do I care about this stuff now, and why should I care in the first place? And the answer is this. Well, we didn't really care about it that much back in the days. Why? Because traditional banks didn't really care about it either, and they didn't pass on the savings to us. Thus, we were just stuck with the savings accounts that only earned around 0.15%. We lost a lot of money by doing that, right? But now we have to keep track of it. Why? Because now we know that savings accounts rates now are actually competing, and everything's actually going to stay competitive. So then that way we save more money in the long term. And if it don't compete, well, we switch our money somewhere else. Because again, if you don't know this, millennials are actually 2 times higher to actually switch accounts and actually just close the accounts and move it to a place where they're actually going to earn more and more money. So we're not like the old people. We move our money all the time according to the best rates in the market, which I really like, by the way. Now, I do want to say something, guys. I'm not going to switch my entire account every time these people meet. If it goes up, it goes down. No, I'm not going to do that at all. Now, here's why. It's because I found an account that's going to stay competitive 24/7, and it's always going to give me like my fair share. Now, I'm going to tell you that, which company it is, actually later in the comments. But comment down below and let me know. Are you excited for the entire September meeting, or are you scared, or are you worried? Comment down below and let me know. Now that we know exactly what Fed rates are, how to affect us, the meetings, the committee, and all that fancy stuff, now I want to talk about the entire savings accounts that have gone up, that have gone down. But I want to say one key thing, guys. Savings accounts, all you really have to care about is one thing. That is above inflation. That way you can actually fight inflation and you're not really losing money every single year by saving money, okay? So as long as it's above like 2%, which is the target rate, you should be good no matter what. So I just want to clarify that. Now let's jump straight into the video. And the first thing is this: how have some of the companies out there reacted to the entire Fed rates actually lowering their rates? And the answer is this, guys. We're going to talk about the new banks, the old banks, traditional banks, and also the investment banking with the entire like Wealthfront and Betterment and all that fancy stuff. I'm going to tell you exactly how those accounts have actually reacted, which one have gone down, which one stayed the same, and what's actually going on in the market currently. So stick around to actually find out exactly what's going on in the market currently. Now, when it comes to new online banks like Vero and SoFi, we've noticed something that's actually taking place. Now, Vero on a normal state only has around 2.12%, but they offer around 2.80% when you do like the right deposit and make like 5 transactions every single month. Now, you might say, Tom, it's a loophole. Yeah, I get that, but 2.80% is still pretty high if you ask me. And on top of that, they offer 2.12%. That stayed the same. It didn't change whatsoever. Now, SoFi, on the other hand, went from 2.25% to 2%. Now, this means that you're still above inflation, yes, but it's not as competitive as 2.12% or 2.80% with Vero. Now, there's a new online banks, and I have to say this, guys, I also have full reviews on SoFi and Vero, so if you want to check that out, just check the description down below. I have everything down there. Because, again, I do like Vero, and I do like SoFi a lot, but SoFi, lower the rates, I get it. Vero stayed the same with a 2.80% as long as you have direct deposit and 5 transactions a month, which is still pretty fair if you ask me. Now, you might be wondering, well, Tommy, I get the new banks, I get why they were still competitive or why they would actually lower it a little bit, but what about the old banks? Like, you know, the old online banks like Discover and Ally Bank, what have they done? Have they stayed the same or have like lowered everything? And the answer is this: Discover went from 2.10% to 2%. Now, I want to clarify one thing here. The answer is this, guys. Discover actually had around 0.95% until Wealthfront actually started competing with all these companies. Now, here's why. Because Discover wasn't really that competitive. Like, they just want to stay like competitive at least a little bit, but they're not the ones that's going to be the game changer to be like, okay, rates change while we're still going to stay competitive. We're going to be up here. No. They're always going to be like, you know, like a little like, you know, just like surfing around, but they're not going to be the one that you actually want to stick around just in case like Fed rates keep changing every single month and every so often. So Discover is not the account that I'm going to leave my money in, but I just want to clarify that ahead of time. Now, the second one is actually Ally Bank. Ally Bank went from 2.20%. By the way, they only raised the rates because more and more people started complaining about like, hey, you know, Wealthfront 2.57%, why don't you offer a higher rate? Then they gave in. Now they lowered it to around 2.10%, which is still pretty decent if you ask me. But again, guys, the old online banks aren't as competitive, but the new online banks actually are because they have more to lose because now they want to acquire more customers. But the old ones basically have an entire customer base established already, and they're way ahead of the time. So there's that actually, but that's why I won't be putting my money for savings with the old online banks because I know for a fact they won't really have that much like incentive to actually try to make everything work for the savings accounts. Okay, now that we covered new online banks, old online banks, let's talk about traditional banking. You know, like the brick and mortar stores, like with the Chase and the BOA and all that fancy stuff, like the physical stores and branches. Do you still remember that stuff, or have you forgotten about it? Well, this still exists, and they still do have online branches, well, in-store branches all over the place still. But here's what happened, guys. Traditional banks like BOA and Chase went from 0.15% to now, after the Fed rates changed, to 0.15%. Okay, they haven't changed whatsoever, and by far they're the most consistent people that I've ever seen in my life. They did not participate in this whatsoever, so I give you props, but in reality, I think over time they would end up losing a lot more customers in the long term because of this entire like not raising their rates whatsoever when it comes to saving. Okay, on top of that, I feel like they use this entire thing like, hey, you know, we have like physical branches, so that's why we can't really share all the profits with you guys. Well, in reality, no. If you don't know this, guys, I'm going to share with you right now. Last year, Chase made around $32 billion net, okay? Net. Now, you might say, Tommy, that's not a lot of money, but in reality, that's net on the accountant balance sheet. That's not exactly how much they actually made after discounting all that tax beneficial stuff that they actually do all the time, because I have like a ton of CPAs and accountants dedicated to saving them money on taxes every single year. Now, here's the thing. $32 billion, and you're telling me you still can't pass on some of the savings to the entire customer base, okay? Doesn't make any sense. By the way, they have around 25 million customers, okay, on online banking, and you still offer 0.15%. That's gonna come around and bite you in the butt because you're not being as competitive, and you think it's cool right now, but eventually it will come around and hurt you. Now, let's talk about our favorites, investment savings accounts like Betterment and Wealthfront. Well, we all know that Betterment beat Wealthfront by raising their rates to around 2.67% for promotional until December. Now, here's my thing. After the Fed rates changed, they actually lowered it to 2.44% until December. But here's why I don't have a lot of faith in Betterment, because it's kind of like this, okay? They said like, hey, we're going to maintain this rate until December, but they didn't. On top of that, they only raised the rates for what? To actually acquire more customers, and I really don't like that much. And right now, they're trying to stay above, but only to acquire more and more customers. But after December, what's going to happen, you know? That's my entire question. What's going to happen after December when you actually have to lower the rate? So right now, for me, Betterment is not the place, okay? Now, the second one is actually Wealthfront. Wealthfront went from 2.57%. By the way, they constantly adjust this rate according to the Fed rates, so then that way they can actually save you more money and actually make you more money over the long term. On top of that, they lowered it to around 2.32%, which again is still pretty high compared to a traditional bank, which is compared to like Ally Bank, Discover Bank, SoFi, compared to like all those banks, right? Still pretty high if you ask me, but it's still being beat out by Betterment. And if you want to talk about like ASOS Bank and you want to talk about all the fancy banks, I'm going to talk about those later in another video. But for right now, I'm not a big fan of those at all. I really like Wealthfront. And here's why, guys. Because for a fact, I watched one of the corporate meetings with the CEO of Wealthfront, and he said this, you know, we raised our interest rates for one reason, to pass along the savings to the customer, and also because we saw that our entire client base actually adjusted and 6x'd itself. So for example, they gained a lot of customers by adjusting their interest rate, and Betterment is trying to copy that exact same thing, but I have more faith in Wealthfront. Why? Because it's very transparent about everything they do, including data, including like interest rates, including everything, okay? So I really like Wealthfront because I feel as if like, hey, they're always going to stay competitive no matter what, and they're always going to adjust it to a fair rate when they're making money, and the customer's always making money because they know in the long run, by having more people there, they get more investment accounts, thus to make more money in the long run also. So they have a lot of incentive to keep competing all the time. So I'm definitely thinking about sticking with Wealthfront for now. Now, if you disagree, comment down below, let me know. I like Wealthfront a lot. I think they're very competitive and very transparent, which I really appreciate. But the minute they stop being competitive and like competing and like being transparent, I'll switch my money no matter what, okay? I'm all about transparency, loyalty, and interest rate for my money. So when I have all three of those things, I'm very happy about everything, okay? But Wealthfront, if they switch anything, well, I'm out of there. I'm going somewhere else. But for right now, I have a strong feeling, well, not feeling, you know, like all the facts are there. Transparency, they stay competitive, and they're always posting like blog articles on all this stuff just to keep you updated with everything, which I really appreciate. So by far, Wealthfront is my best choice. Comment down below if you agree or if you don't agree whatsoever. Now, here are my final thoughts, guys. I strongly believe that Fed rates will keep changing over the long term in the next year, 6 months. Doesn't really matter. It will continue to change no matter what. Now, when it changes, interest rates will fluctuate, but for right now, I think Wealthfront is the best place to actually have your money currently. Comment down below again if you disagree. But here's my thing. If they stop being the place to be, I'll switch my money over somewhere else, and I'll tell you exactly where to. But for right now, I think they're the best choice currently. Now, I want you guys to stay positive about this because why? Because now we have something to look forward to. Like, for example, almost every single month we know that Fed rates will change, or like, you know, something's going to change here and there. So our interest rates might go down or up, but in reality, we know that we're staying competitive and we're staying above ground because, again, the goal is to stay above inflation. That's the entire goal here, okay? Above inflation, save up money to buy assets, and that's about it. Now, guys, as always, thank you for watching the video. If you like the video, go ahead and like the video. Really appreciate it. It helps the channel grow a ton. On top of that, subscribe to the channel, hit the notification bell so you get notified every time I post a new video. And if you want to talk to me one-on-one, uno, just DM me on Instagram at TommyBryson. And if you want to talk to all of us here, join us on Discord until it's open. It will be closed, so get on while you still can. And guys, if you want to watch more videos, click these links right here, or subscribe right here if you're on mobile. And I'll see you guys tomorrow on the next video. Thanks for watching, and peace.